Hey guys, I'm Ali from FX Scout. So today I'm very excited to show you a complete trading strategy for the Euro-USD pair that is designed specifically for beginner traders. This is a mean reversion strategy, which means you use market conditions where the price is stretched very far away from the mean or the average price and where it's bound to snap back. You want to think of it like a rubber band. Once you stretch it too far in one direction, it will eventually snap back to its original position. And why does this matter? It matters because no single strategy works in every single market condition. So you basically want to think of this as a trading tool for your trading toolkit. Sometimes the market trends strongly, in which case you will need a trend-following strategy, and other times you'll find that the market is moving up and down between support and resistance, and therefore you need a trading strategy that can capitalize on those price movements. And the more tools you have, the better prepared you will be for the different market environments you'll find yourself in. What I want to remind you here is that these are trading ideas only. This is not financial advice. If you're new, you want to take this trading strategy, you want to back test it and forward test it on a demo account to see how often it works and whether it's something that suits your trading style and your trading personality. But as a starting point, this strategy is an excellent foundation and it uses 3 simple indicators. Firstly, it uses the 20-period simple moving average, the RSI or relative strength index, and a filter called the average directional index or the ADX. And later I'll also show you a bonus confirmation signal, RSI and Bollinger Band divergence. I have made a video on that and I'll pop the link to that in the show notes. So look out for that one. And by the end of this video, you'll have a complete step-by-step trading plan that you can practice immediately. Just a reminder that Forex trading is very risky and that most traders lose money. Trading is very difficult and it is made even more risky by using leverage. Please take this video as education only and do not consider it trading advice. Before I get started, I want to just jump into why the strategy works. Now, as we know, the Euro-USD is the most liquid currency pair in the world. It is the most traded currency pair in the world. And because so many banks, funds, and traders trade this pair, it often reacts in a mean reverting way. That means that after a sharp push in one direction, it often returns back to its average. And you can think of the 20-period simple moving average or the 20 SMA as that short-term average. You can think of it as fair value over the last 20 candles or whatever time frame you're trading. Then if we look at the RSI tells us when an instrument is overbought or oversold, so whether it's stretched too far in one direction or the other. Lastly, the ADX measures trend strength. So if it is high, then it means that we've got a trending environment, and if it is low or under 25, then we see it as more of a mean reverting market condition. So in simple terms, we're basically combining these ideas. Firstly, we're trading on the Euro-USD, which is the most traded currency pair in the world. Secondly, we're finding an extreme with the RSI. We're then going to confirm that the market isn't trending with the ADX, so the ADX should be below 25. And lastly, we're targeting a snapback to the 20 SMA. And that's basically all you need, 3 tools and 1 chart. And you're going to set up firstly your Bollinger Bands. And the reason I say Bollinger Bands is that they already are set up with the 20-period simple moving average. And this is your mean reversion target. Next, you're going to set up the RSI. This is a 10-period RSI, so I'm going to change those settings. And then you still keep your lines at oversold below 30 and overbought above 70. Lastly, you'll have your ADX or your average directional index, and this is a 14-period ADX. You'll also draw a horizontal line at 25. So here are the entry rules for the trade. For a long trade, your RSI must close back above 30 after having dipped below. So you'll see that it goes into oversold territory, but then it comes just above 30 again. Next, you want to make sure that on that same bar, the ADX is below 25. Thirdly, you'll see that the candle touches or closes outside the lower Bollinger Band. This isn't absolutely required, but I like it because it adds a level of confidence, which also adds confidence to the trade. Lastly, you're going to enter a buy at the next candle's open. And as you can see, of course, this is something I've already set up, but you can see how that worked out really well. For a short trade, your RSI must close back below 70 after rising above it, so after you've seen it go into overbought conditions. The ADX must be below 25, so that's your standard rule, always below 25, no matter whether you're going long or short. And then ideally the candle touches or closes outside the upper Bollinger Band. And then you'll enter a sell at the next candle's open. What I like about this strategy is that you're not guessing. This strategy is very mechanical. So you're basically ticking off the checklist and entering the trade when you're seeing this confluence of factors come together. Now I want to talk about exits and risk management, probably the most important part of your trading strategy. So for your stop loss, you're going to place it just beyond the signal candle's extreme or 1 ATR beyond entry, whichever is farther. As we know, the ATR measures volatility, so this ensures that your stop is far enough away so that you don't get stopped out on the noise. If we look at the take profit, the profit target is usually the 20 SMA, and that's our middle Bollinger Band. That's our magnet for mean reversion. And you can either close the full trade at the approach of that SMA, or take partial profits, say 50% of the SMA, and you can let the rest run. You can also set a trailing stop, which I find very useful, behind that 20 SMA. And again, you can set it at 1 ATR once the trade is in profit. In terms of risk, please never risk more than 0.5 to 1% of your trading capital per trade. So if your stop is 80 pips and you're risking $100, then size your position so 80 pips equals $100. In this way, a losing streak won't wipe you out, and you give the edge a chance to play itself out. Now let's add some filters that make this strategy safe and realistic for beginners. So firstly, the ADX filter. Never trade when the ADX is above 25. When it's above 25, it means that the market is trending. This is a mean reversion strategy, which means that it's only appropriate for a range-bound market. Number 2, a news filter. Skip trading on days of major Euro-USD news. That means ECB or Fed rate decisions, US non-farm payrolls, or US CPI. High impact news often blows through your technical setups. Number 3, a volatility filter. So if the ATR or average true range is at the top 10% of the last few weeks or months' values, then you want to skip the trade. This usually signals shock moves. These filters reduce the number of trades you'll take, but they'll improve the quality of your setups. Now I want to show you a real bonus confluence that I also find works really well, the RSI and Bollinger Band confluence. So here's how it works. If price makes a new low below the Bollinger Band, but the RSI prints a higher low, that's a bullish divergence. It signals that selling pressure is weakening. But if price makes a new high above the upper band, but the RSI prints a lower high, that's bearish divergence. It signals buying pressure is fading. And when you see this divergence at the same time as your entry rules trigger, that's a very powerful confluence. As a beginner, I would suggest practicing spotting it by drawing trend lines on the RSI compared to the price. And over time, you'll see how often divergence appears before sharp mean reversion moves. And in fact, I would actually print out a whole lot of charts and mark this out so that you can really see it and identify it on the charts. So I want to pull it all together with an example. Here, you see the Euro-USD has been trading sideways in a range. The ADX is below 25, so conditions are range-like. A big red candle pushes price below the lower Bollinger Band. RSI is below 30, but then closes back above 30, giving us a long signal. On the RSI chart, we also see divergence. Price made a new low, but RSI made a higher low. At the next open, we buy. Our stop goes below the candle's low, and our target is the 20 SMA. A few candles later, we see that price grinds back to the 20 SMA. We take profit. This is a simple structured trade, but that divergence gave us the extra confidence. I just want to quickly run through a few mistakes to avoid and something that you can just remind yourself when you are trading in a mean reversion environment. Number 1, don't ignore the ADX filter. If it is above 25, you are going to really come short by trading against the trend. Number 2, don't enter before the candle closes and you have confirmation. Number 3, do not risk more than 1% of your trading account. Over time, you might find that you'll blow your whole account if you're risking too much per trade. And number 4, please don't trade during major news events, especially when you're still a beginner and figuring stuff out. You'll find it'll really ruin your technical setups and it'll run down your confidence. So I hope you enjoyed this video. That's a very powerful mean reversion trading strategy that I find works pretty consistently. It's simple, it's mechanical, it's beginner friendly, but remember this is a starting point. Figure out what works for you. Figure out how to make the strategy your own. Your job is to test it on a demo, back test it, forward test it, then open a very small live account and record your results. If you found this video helpful, please subscribe to our channel, please give us a thumbs up, and give us a comment in the comment section and let us know how it worked out for you. Thanks so much, and I'll see you in the next video.